Good morning, everyone. Uh, yeah, sorry I'm late by 2 minutes. Uh, I appreciate your patience. Um, yeah, I'm coming back after 3 weeks on this webinar, and we moved it to Friday because tomorrow being a Ganpati festival and there's a holiday in India, so we moved it one day earlier. And so, um, as every time, correct? If you have any questions on the as I speak, please post that on the text message and I'll answer that after the end of the presentation. And if you, I also would like you to subscribe to our channel uh, so that you can get regular updates. And the other thing, this webinar is for our clients in India and Indian residents. It's not for people living in US or Canada. Okay, thank you. Thank you very much. And let's start now. So I'm going to talk about market update and the sector review of information technology, correct? Now, so let's start what's actually happening in the market, correct? The COVID. The market update, what's happening in the stock market. First, I'll talk about that, and from there we'll go to the number of coronavirus cases and stock markets both keep going up. For last 4 months, we are seeing the trend after March 22nd, when the market turned around and the cases started picking up. Today, also India has got the highest number of cases in the world, and still the situation is not improving. And at the same time, the markets keep going up. Why? So I'll answer that question through these presentations. A lot of people are thinking that stock market doesn't have ground realities, what's happening in the main street, so which is not true. But I'll answer why that's happening, correct? So now, if you see the markets as of today, the Indian markets has recovered 48% from the bottom. The US Nasdaq has recovered 60% from the bottom. S&P 500 51% from the bottom. Dow Jones 50%, and Japan 38% from the bottom. The rupee has depreciated 5%. And if I take the returns from January 1st, so index was 12,182 as of Jan. Today it is 11,312 as of yesterday's close. So the market is still 9% from its Jan 1, minus 9 year-to-date return. But the Nasdaq has given 26% plus 5% depreciation. So it's 31% high. So the gap between Nasdaq and India is minus 40. So India is trailing by 40% to Nasdaq. It's trailing 18% to S&P 500, and Dow Jones is trailing 10%, and to Japan it's trailing by 17%. So India is still underperforming on a global this thing. Now, is this right? I'll explain. Now you're looking in isolation that India has recovered 48%. It's too high. But if we look at the global trend, India is still underperforming, correct? Now, why is that so? So there's a logic behind it. Instead of predicting the market, first we need to understand what actually the market is telling us. So we'll try to analyze what the market is trying to tell us. So Indian markets are underperforming the US and Japan. US and Japan are more value, and the market is volatile, going to be volatile in the coming future also, correct? But the direction is upwards. Now, why is that so? Why is that so? So let's analyze it further. Now, remember in April 7th slide, the first webinar I took after COVID-19, I had said the US market will lead the world market. We had said that. Then a large number of small and mid-cap leverage business will go bankrupt, which trend is going to pick up even more in the next 12 months to 18 months. Cloud and digital economy will lead the world, which the IT, which is actually happening. Nasdaq is leading the world. IT and cash-rich companies would win, correct? Social distancing will be a new norm of working, which is happening. And the massive shift in asset allocation is going to happen. And that's also happening, correct? So this acceleration is happening. What we had predicted in April, the same trend is going further, and it's getting more consolidated, more pronounced. So the market, why that is happening? So let's analyze that further, correct? Now, if you see this, the problem which we face this year is COVID, correct? How the COVID crisis is going to be solved? If you there is a problem. Number of people affected worldwide has gone up drastically up. In India, we are getting 70,000 cases per day, which is very high. And the pain is there. The common man is feeling a pain. And so how worldwide this is the same scenario is there. So who's going to solve this problem? Science is going to solve the problem, correct? Eventually this science is, so what is science? Science is technology. So only with the help of technology we are going to solve this problem. And that's the reason technology sector is leading the world stock market. That's so what is technology? Technology in information technology, IT, and healthcare. Both these sectors are leading the world economy because there is a crisis, there is a pain, and only these two sectors will pull out of the whole world economy. And that's why more money is going. So more the cases go up, the more IT stocks and pharma stocks are going to go up. So that's what the trend we are seeing. And now technology sector is much more than just information technology. What I mean by technology sector means people who are using technology very effectively in their business and reaching the customers and servicing them. And so even those companies are doing very well. So technology is much more broader phase. People who are able to understand what's going to happen in the future and position their businesses accordingly, they are all doing very well. Now let's go further down, correct? So that's what's happening in the market. Now in 21st century, innovation, what was innovation in 21st century? It was electricity, automobiles and weapons, correct? So the asset class of oil, gold and real estate were the key assets. In 21st century, what is the key asset class? The key asset class is Internet and 5G allows business to expand without requiring additional space, without buying more footprints, without opening more shops, without opening more branches. Technology allows you to sell the customer and reach the customer anywhere in the world, correct? And so the requirement for physical assets of real estate is less, the requirement for machines is less, people is less, the fixed capital overheads are less. If you invest in technology properly, you can service globally. And so what is the key asset? Data, information is the key asset, and that's what driving. So there is a major shift. The key assets from oil, the driver of the world economy, and has moved to data. So that's what we're seeing the fight between going on China and US also. Why US is opposing China? Because China is accumulating data of the US people, India, correct? And so that's why we are opposing the data. So it's like, there are two players, now there are two businesses. One business is and doesn't have data, doesn't have information technology. He's going by hunch and building his business. The other guy has information technology and has all data of all his customers, information. So it's like playing cards blindly. One guy is playing blindly, one guy has seen the cards. So a guy who has seen the cards, he knows what risk he's taking, he knows where to put the money and how much to play. So the chances of him winning are 100 times more. The guy who's playing blind, he's playing with a hunch. So same thing is happening in the real economy. So information technology is allowing people to see the data and see the trends and plan the business accordingly and strategies accordingly. And data is the key asset. So and who can get that assets? Only big companies can get. Small people to get that kind of information data is very difficult. So that's why big businesses are becoming bigger and small businesses are getting crushed. And that's the same pain happening in India, US, everywhere. And that's why Internet and 5G technology is very important. That's driving the growth. Now, information technology is acting like a funnel to all sectors. So today, through information technology, you can reach remote parts of the world. You can reach the customers. Like you see the webinar today, I'm sitting in Dallas and talking to my clients in India. So it allows me. 25 years back, this was not possible. Now imagine an advisor who doesn't use this technology and he has to meet person to person. His reach is very small and he is not able to communicate to all his clients. Whereas we are using technology and it's allowing us to reach, correct? So when the demand for technology has gone up, then the demand for real estate. commercial shop. So that's what information technology is doing today. The sector is becoming a key for growth and survival, and that sector is becoming very important. And now, what are key parts of information technology is just not Infosys and TCS. That is software services which come, but there is developing new, like Microsoft, Google. There's software, device and infrastructure, like Samsung. They are building devices and infrastructure. Correct. IT, business and services. Infosys fall here. Emerging tech. How you use the technology. How you use the online platform. How you use like ICICIdirect.com is emerging. There, you allowing you to invest, buy and trade in stocks online, or you take any Naukri.com, correct, and you take any Amazon. Those are emerging technology. Uber is an emerging technology, correct. It's allowing you the transportation to book a cab, and then telecommunication services which allow internet, correct, which is mobile, 5G. 5G is yet to come, but with 4G. So these are the 5 parts of different technology sectors, and they are growing. So how much is telecom? Consists 20%, emerging technology 13%, IT, business services 30%, device infrastructure 17%, and software 20%. So India is strong here. India is not strong here. Device infrastructure 100% India imports. Here also India imports. So as far as India is concerned, India is strong only in this sector. Now all other sectors, now it's also number 1 is here, and number 2, it's trying to become strong here. It's not yet. There are only 3 big players left, and so these are the 5 sectors within the information technology which are growing, correct? And which, so let's understand the same percentage would be applicable to worldwide or India also, but India is very strong here. Now, see, let's analyze this further, correct? What is the global share of information technology from 2013 of different economies? So many, when I saw this slide, I was shocked. America constitutes 31% of world information technology market. Europe 20%. China 12%. Japan 6%. India is only 1.3%. We think Indian economy, IT sector is the biggest now. India is only 1.3% of the global technology sector. It plays only one. So within the software services, India has a 15% market share. But if you take a complete basket of technology, India is way behind. And even a country like China is 12.3, correct? And the rest of the world is 26. So there is a huge scope of information technology sector to be developed in India in next few years. Now, see how China progressed. Started with manufacturing, but then it focused on technology. Today, there are only 2 technological countries. There are 2 kinds of internet. One is the American internet, one is the Chinese internet. So that's where the fight is going on. So China has progressed way ahead of India. It was way behind India in 1970s and 60s, but it overtook because with the use of technology. Now, India needs to do that. So this is one slide I want you to keep in back of your mind. Indian technology sector is still very small on a global scale basis, except for a handful of companies you count. I'll share that with you more down the line. So India has a long way to go in technology sector. Now, if you see the way 21st century is shaping up, is getting shaped by information technology. This century is going to be defined by information technology. So now if you see in the past, this is from 1700, engineering and that automobile, electricity, and those developed that, correct? But if you see in the future, correct, the information technology economic activity is going to be, impact on the economy is going to be so big compared to the past in 1900 where automobile, electricity did that. So there is going to be a massive growth through the technology sectors, especially in mobile connections, cloud computing, internet things, and all this batteries. We can store. Tesla is not considered as an automobile company. It's considered as a power storage, correct? Tesla batteries are so powerful that it can take your car to 500 kilometers just on that battery power, correct? So the batteries are so powerful, and they were able to design those kind of batteries, correct? So these are the technology sectors of the future where growth is going to be there, and I'm going to talk about that, why you need to invest in those sectors and have less exposure to the old value sectors and old economy stocks. That's the other reason. Now if you look at sectoral performance of in US for last 10 years, the overall, if you see, S&P 500 has gone up by 200% in last 10 years, but information technology has gone up by 450. Now 400 double. So the growth there is twice the growth of any other sector. So this, and consumer discretionary, we all know that US is a consumption economy, and that sector has also grown up because the income has gone up. Healthcare has grown by 257, but this year healthcare is going at a much faster rate. So these are the three sectors three sectors you need to focus on. But today we are going to talk about only of information technology. But the last 10 years trend was information technology is growing at a much faster rate. Same trend is going to continue, or is going to get accelerated more going forward, correct? It's going to. Now, which are the countries with the highest technological expertise? If you look at this way, the technological expertise overall, I'm talking about overall, right from not only in developing infrastructure, IT infrastructure, hardware, so the complete technological infrastructure. Japan is number one, China is number two, South Korea is number three, US is number four. India is nowhere in this picture, correct? India is nowhere in the picture. So India has a long way to go, but India is going to catch up. As the government of India has observed this, the wars are not going to be fought on land. The wars are going to be fought on data and on technology in the financial markets. So as every country understands that, the focus is going to change. So that's why the importance of technology sector in your portfolio is the key. How many good technological companies and businesses you have? Now let's look at the major market cap of the major IT companies of the world. So let's first focus on the country wise. So in US, the total market cap of technology companies is $10 trillion, which is 35% of the total market cap. So 35% of the market cap of US stock market is in technology sector. China, it's $2.5 trillion, which is 32% of their market cap. China market cap currently today is about $8 trillion, 7.5 to $8 trillion. 32% of that is 2.5. India, it's only $300 billion, which is 13% of the market cap. So you see how small India. Now, India's market cap of all technology companies, TCS, Infosys, Cognizant, HCL, Wipro, InfoEdge, and all other companies put together is only $300 billion. That $300 billion is less than Alibaba, is less than Facebook, is less than Google, Amazon. So there is a company called Adobe or Tesla. Both those companies have more market cap than the entire market cap of all technological companies in India. So imagine how much behind India is in information technology. If you look at it from a big picture perspective, and how much scope India has. Now, so you will see a massive growth happening over a period of next few years in this sector. So there is a huge upside to this sector. That's what I'm trying to tell you. And you require technology to solve the problems. So this COVID situation, why the market is going up? Market is going up because technology companies are able to deliver products and connect people through internet and through work from home, and they are getting able to keep the world economy floating and work, correct? And that's why those stocks are going up, because they are solving the problem. Of course, there is a lot of pain in small businesses. There is a lot of pain in restaurants, travel industry, education center, education industry. They are all going through a lot of pain. Yes, but still the world economy and people are able to live their life in the best possible scenario through the help of information technology, and that's why information technology stocks are going up compared to others. And there is a so if you try to look at the margin, don't look at the historic. Oh, the valuation has gone up. Valuation has gone up because they are solving the problem. They are winning the market share, and that is the reason they are going, and they'll continue to go up till the time the COVID situation doesn't get solved, doesn't get resolved, and it's going to take another 2 years. So you will see that you may not see a major correction coming. Now, other aspect I'll give you why India is underperforming the global market, why Indian technology. So Aadhaar was in India launched in 2009, but actual implementation happened after Modi came. More aggressive and more rigorous implementation happened after 2014, and so every person in India started getting the system process getting built. Social Security in US was introduced in 1935. So because of this Social Security and Aadhaar, where you can do online, you can give online loans, you can identify your end customers and everything, and do the transactions, file tax returns, get everything. In India is still a very new player. The US was way ahead. So China also, every person is documented because China is a communist country, correct? There it was already had that place. So those countries which had those processes, and they had a way ahead of lead. India is catching up now. So you will see as this information technology penetrates more and more. Today in America, you don't have to. I can buy a property sitting anywhere in any part of the world in US and execute a legal document. So I'm a US citizen. I can do that through my social security and driver's license and online. I don't have to physically go to the register of properties to sign a document. I don't have to meet physically a person, buyer and seller. Everything can be done online. I can rent a property. I can sign legal contracts, and those kind of things are possible through internet because of this social security. And so the economy is working on IT is more efficient and more developed in developed countries compared to India because of this. So this is another base. As India, Aadhaar becomes a solid base and things, you will see a lot of other things coming up to India. So you will see a growth. Now, I'll give you another example. All tech companies are not only information technology. I'll just share this I'll just share some information here. So Apple today has become a $2 trillion, which is almost 90% of India's market cap of all companies put together. Can you believe that? One company, Amazon, is 1.6. Microsoft 1.6. See Tesla, $351 billion, correct? It's slightly more. Today Tesla closed more than 2,000. This data is of yesterday. So you can see the changes, correct? Now if Apple goes up or down by 10% in a day, that is equal to $200 billion, which is bigger than entire TCS or Infosys or Wipro, correct? So that much big company. But now if you look at the other end, the rocket company, this rocket company, and many of you may not be aware, this company got listed just 2 weeks back. It does online home mortgage. It has 30% market share of US. So you can take a online mortgage for buying a house through this, and their market cap is what? $20 billion. Now, this is online education to you, correct? Live person, voice technology. So when you talk to, they say e-commerce, that's electronic commerce. Now there's going to be c-commerce, chat commerce. Means you talk to on a phone and you can do a commerce, correct? You don't have to type in. So these companies are developing those technologies. Teledoc. Today in America, you can consult any physician sitting at home on internet, and this company valuation of this stock has gone up almost 100%, 258% in 1 year return. See this stock because of COVID. Now this kind of technologies are emerging. Now Twitter, real-time news you get, correct? So These are technology-enabled companies. DocuSign, you can sign any legal contract and which are enforceable without meeting a person in this. So that market cap has gone up by 325% in 1 year. Uber, correct? Uber has gone down because of COVID thing, but Uber is what? It's a software which enables efficient transportation and taxi services, correct? So these are key technology, Softify, music, correct? See, now these are not pure IT companies, but they are using IT-enabled businesses like Amazon did, correct? Amazon was the leader. Amazon stock today is 3,200 and 3,300. It was in the year 2000, Amazon got listed in 1998. It got listed at $25. From $25, it went down to $8 in the year 2001. And today it's 3,281. Now, I have seen Amazon was making losses. Even today it's making losses. It's not paying dividend. It's never paid dividend. And still the stock is going up, correct? Because it's capturing the market and becoming bigger and bigger worldwide. So the world has changed. So the stock market philosophy has changed, understanding of valuation has changed. How effective the company is in solving a problem, the valuation is got on that, and how effective the market leadership is. So these companies will continue to do well, and you will see this kind of companies coming to India also. And you will see this kind of companies coming to India. And so going forward, everyone needs to have portfolio exposure in this kind of emerging technologies instead of going for value investing or buying stocks like L&T or real estate stocks or Tata Steel. Those stocks will have less demand and they are overbought, over-owned, and technology portfolio. How many people have missed the bus of last 5 months in the stock market? How many people had exposure of more than 10 or 15% in their portfolio to technology stocks, pharma stocks, communication stocks? Majority of them had over. The other risk which I see in India is people have over diversified. They have not focused on sectorial. Now, the whole COVID situation is, there were long-term trends of digital globalization was happening, but the COVID situation has forced that trend even stronger. What monetization could not do in 2016, demonetization, COVID has done much faster. Today, I'll just give you another development. What happened in US? The AMC theaters today opened up all over US. So one of the conditions was that they will take bookings only online or through credit card payments. No cash will be accepted. No cash. So today most of the businesses in America do not accept cash because the cash may have a virus. Physical currency may have viruses, correct? So digital economy is picking up at a much faster rate than what it was before COVID situation. Now, why digital economy is, it enables to increase productivity, acceleration of growth is much faster, and the requirement of working capital and fixed cost is lower. So initially you may spend some more money on developing your IT infrastructure, but once you build, you get an edge. And you don't have to have more offices, you don't have to have more branches, you don't have to have more people. And then that your cost per customer or cost per product goes down drastically, and then you start capturing market. So today, if you ask any Fortune 500 companies in America, what is the capital budget for next 5 years? So everyone has cut their capital budget on business expansion, like buying properties or increasing the factory or buying more machines. But they have reduced those kind of capex costs, but they have increased the capex cost on information technology, developing more apps, developing more data centers, developing more this kind of. So those kind of stuff has happened more and more. Now, so when I talk about information technology, you need to look at all this from a very broad perspective, and you need to have a proper exposure in those kind of investments, and they are going to grow much faster. Now, by global standard, India's information technologies, it contributes only to 7.7% of GDP of India. In US, it contributes almost 30%. 25 to 30%. So by global standards, by India standards, we think IT has done very well, but by global standards, we have underperformed. With the kind of population we have, the contribution from IT sector is going to increase tremendously. So you need to have a higher exposure to IT sector in your portfolio, and that's one of the reasons. What I'm saying is it's one of the large employers, and 100 billion revenue is nothing compared to the companies in US or China or Japan or anywhere you count, correct? So India is going to grow at much faster rate in the future. So that's why you need to have a proper exposure to India IT stock, information technology stock, and the US. Data is the new oil. As I said, whoever has the data, he knows how to play the cards, correct? Whoever has the information is, so in every aspect, the more the data, and the fight is going on data. So invest in companies who have maximum data. Why Google is valued so much? It has the maximum information. Google knows everything about you, every person. If you do Google search, Google Map, your Gmail account, Google knows everything about you, correct? So they have the maximum data. Same way, when Starbucks want to open any new location, it'll ask Google, okay, tell me where this kind of people who spend more than $5 on a coffee, or people with this income scale, where their meeting points are more, where they go more or they shop more. Starbucks will open a store there. So instead of doing a market survey, they just contact Google and get the data, and they open the store there, correct? So that's what data is the key, correct? Data is the new oil, and you focus on that. Now, so data is stored somewhere. It's stored in the cloud. For cloud, you need servers, so correct? So computer servers, hardware, companies which are building solid IT hardware. In India, doesn't have expertise in that. So those kind of IT hardware companies are mostly in Japan, China, not China, sorry, Japan, Taiwan, and South Korea, correct? So you need to have proper exposure to those kind of stocks also, through mutual funds or ETFs or whatever we call it, correct? Now, as I said, India is very strong in business process management. Now, this market is also going to grow. So India, all these big IT companies, big manufacturing and big companies, they are shifting more and more business services or back-end work to India, where India is going to grow because they have less confidence on China. They don't trust the trust has broken up. So you are going to get more work. And if you can work from home in America, you can work from anywhere. So many companies in America have realized that if you can work from home, why can't I shift this work to India? So you will see even growth in companies like TCS, Infosys and all. But what I'm trying to say is other than TCS and Infosys, there are more other type of IT companies which are going to mushroom in India, and which India will need them to grow, correct? So we need to, we will see a growth everywhere in IT sector. Then what are the notable trends? India is a leader in software services, but it's not leader in other sectors, correct? It is not a leader in other sectors. There is a changing business dynamics. Geopolitics is changing worldwide. So India is getting aligned more towards the US. So we'll start getting more business from US companies, and more US IT companies will come to India, including hardware, software, online, like Amazon. They'll invest more, so we'll get more FDIs. And the big players are going to take more market share. So what is happening in this COVID thing, correct? I came to US on 24th Feb. Since 24th Feb till today, I have not visited a single small shop or mom and pop businesses. Anything which I needed, I have bought it from Costco or Walmart, or bought it online, and only big players, correct? Only big players, Home Depot. So what is happening is small businesses are getting crushed because of COVID, and in US much more. So they say, I was watching CNBC here, and someone made a comment that if you have a number of employees less than 10 in US, any business, the probability of that business getting closed, already closed, is 50%, and of the remaining 50%, another 40% are going to get closed in next 18 months. So US government is trying to save them, but it's difficult. They are offering interest-free loans, but many people are not even taking those loans because they see, what I'll do with that loans. My business is not going to be profitable, so better close it. So large players are becoming bigger and bigger, and they're gaining market share. And that's why I'm saying, improve your quality of portfolios by being top heavy. Don't try to do value investing. Don't try to do invest in growth. Invest in companies which are large, and invest in the companies which are IT related. Focus. They are from information technology, or they're using information technology as the key thing for their growth, because those companies will do very well. Now, for example, in India, if I'm saying, if you take Siemens, Honeywell, these are in IT manufacturing. They are doing very good in India. In information technology, Infosys, Paytm, TCS, Wipro, correct? IT services, IT. So this kind of stocks you should have in the portfolio. Now, the other thing, people are saying markets are so overvalued. Why should I invest in equity funds or stocks? And why shouldn't I put money in the fixed deposit or keep in the sidelines? So my answer to that is, today you want to put your money in the most ethical business and most safest place, correct? The money which is very used very efficiently. Now, if you look at that from that perspective, Hindustan Lever, TCS, Infosys, those companies are using the money most efficiently. So you are investing in those stocks. The problem with those stocks is you find them overvalued because they think their price fluctuates. So you want to put the money safe in a bank deposit. When you put the money in a bank deposit or in a debt fund, where the money goes? Money has to eventually get deployed somewhere. Money is not getting... So Hindustan Lever, TCS, they don't borrow money from banks. They don't borrow money from debt market. So that money is going to whom? Is going to second-run companies. It's going to retail, going to a person to buy a home, or it's going to a business manufacturing company, or it's going to a builder, and it's going to small retail small businesses. The risk is very high. The risk there is very high. So by trying to, I would put my money in the best businesses rather than to put in the steady return kind of stuff. Eventually, the best businesses will outperform their steady returns. So that's why I feel the markets are not overvalued. A lot of people have missed the bus and they're waiting for market to correct. Markets are not going to correct. They will fluctuate between 5% up and down, but they're not going to correct more than that. And this growth companies like Microsoft, AMD, Nvidia, Google, Apple, they are going to grow, continues to grow. See, Apple has gone to $2 trillion market cap even without 5G phone. Now, when 5G phone comes next year, everyone will need to replace those phones. Even without 5G phone, Apple has gone to $2 trillion. Imagine, so the kind of potential and the cloud these big companies have. So you'll see a massive changes in the investor behavior in next 2-3 years. And this new emerging technologies, as I said, correct, COVID is changing our habits, avoid physical contact where possible and do more online. So even doctors, lawyers, chartered accountants, tax consultants. So all these other technology sector companies are going to do very well. So you need to invest in them. I think now I'm towards the end of my presentation. So keep your you can text me the questions and I'll take them. And now again, I'm coming to within the IT sectors. It's not only information technology services there are cloud computing companies, network companies, storage companies. All those kind of companies are there, which is going to allow you to grow. You need to find out. So we need to invest in those mutual funds also, which are from overseas in India. So we get those kind of exposures, and you need to stay invest. Don't try to time the market, or don't try to you for next 10 years or 15 years, these sectors are going to grow. Okay, they will be volatile, they will go up and down, fine enough. Just keep building your portfolio there, because this is the sector which is going to help the world economy and take the 21st century as a technology center, growth oriented, focus there. Again, I'm saying, correct, information technology includes infrastructure, data, cybersecurity, software, a lot of things are there, correct? So you have to look at from all that perspective. Now, US venture capitals are investing in new technology companies. $44 billion were invested, correct? See, so these are all startups. I'm talking about startups, correct? This much investments are going in startups in US. There is going to be a lot of innovation happening in next 5 to 10 years, and we need to have a proper exposure to the sectorial funds in this. That's what. Now, can these companies go bankrupt? Can Microsoft go bankrupt, which has a market cap of 1.6, has a revenue of $145 billion, no debts? Google, Apple, Facebook. Now, these companies can go bankrupt only if they do some fraud or break some laws. Yes, if they do some illegal activity, any company can go bankrupt, correct? Like what happened in Lehman Brothers, or not Lehman Brothers, I would say WorldCom, correct, which was in 2001. So other than breaking the laws, but these are ethical companies. Business-wise, their business models, it's very hard for them to go bankrupt, for at least in the foreseeable future. Can anyone build data like what Google has built? It's impossible to get the kind of data Mr. Google has, correct? Impossible to do that today for anyone. So these companies have become virtual monopolies because of their size. The other classic thing about information technology companies is it's very less competitive, means very difficult for new players to come, and anyone can put a manufacturing plant, but to build a company of size of Google, Apple, Infosys, TCS is not easy. So they were lucky, and there are a lot of barriers of entry in this kind of stuff. So competition is less. Once they achieve a certain size, there is less competition to them, and that's why they get a premium valuation. Again, I'm saying this slide I'm repeating here. This is my end of my presentation. That India's IT sector is only contributing 1.3% of global information technology. It has miles and miles to go. You need to have a proper exposure, and this is going to grow significantly. We have 15% of world's population and have only 1.3% of IT. It doesn't make sense. India, even if we go to 5% or 6%, imagine the growth in the IT sector will have in the next few years. So let's focus on that. Make sure you have a proper allocation to the businesses where technology is a key driver. So this is the message which I want to give everyone today, and feel free to ask your questions. And this is my end of my presentation. Investing is thinking positive, in a rational, and trying to understand what market is telling you, not to try to say what market should do. I never try to say that market is wrong. If it's wrong, I am wrong. Market can never be wrong. Market always, billions of people all over the world are participating in the market, and they can be wrong, I can be wrong, correct? So we need to respect the market, understand, and the way I see the market today, it's not going to correct, at least in the short term. A lot of people 95% people have missed the rally in India, US, everywhere. so they're waiting on the sidelines. A lot of money is floating. Liquidity is there so much worldwide, and that liquidity is waiting to get in the stock market. So with this, I open the session for questions, and feel free to ask. Okay, the first question is, considering the investments for all major technology companies in the world, where would place Reliance Jio? Is it a telecom stock or technology stock? Okay, so my question is, Reliance is like Amazon to India. Amazon is sells products, but it's also technology. It's also a cloud company, computing company. So Reliance, I would put it this way: it has a hand in every pie, correct? And I would say I would compare Reliance to Amazon of India, and let's see how it should outperform or perform with the market. It won't underperform, and so everyone needs to have a proper exposure to a proper thing. That the second question: Indian IT sector is more B2B and serving the global giant. Does it have a scope for B2C in India, and how this will impact the overall sector? Yes, very good question. Yeah, this is going to happen. As I said, in US, B2C is much bigger than in India. So we will see new companies, like there is a company called InfoEdge, correct? Naukri.com, and they own all these web portals like, I don't matrimonial.com or whatever, Naukri.com. And so those kind of portal companies will be there, where business to consumers will be there. And you will see those kind of companies emerging in India over the next few years. We'll see a lot of growth there. The third question is, Airbnb was considered to be a disruptive company with COVID happening. It has been impacted like any other hotel. So how will technology impact in the hospitality sector? Okay, good question, very good question. Airbnb was considered to be disruptive, and it is disruptive. Okay, and it is still disruptive. And the latest update on Airbnb is they are coming with an IPO, and I'm going to invest in that stock when the IPO comes. I consider Airbnb outperforming the hotel sector way ahead, because it allows you to get much more better. So Uber, I have invested in Uber too. So this company, so Amazon was disruptive, correct? Amazon also went through this cycle phases initially, where tax issues were there, legal issues were there. Same, all these disruptive companies, people attack them, things go wrong, but they adjust and adapt, and eventually they succeed, because the technology is very disruptive, and they should do well. Instead of staying in a hotel, I would stay in an Airbnb property anytime, anywhere in the world. So they are going to capture. They are getting more bookings than hotels even today in US. Then the next question is, Japan being the best tech country in the world, why is there no Japanese company in the top 10 most valued companies in the world? Very good question again. Yeah, Japanese, they were there in the top 20 companies in the world, or 10 companies in the world, in the year 1990, when Honda and National, Sony were there. Japanese are playing low fiddle, and they are more in the hardware and more on the back end of the technology. They are not on the front end. So the valuation they are getting is of that type. And if you take Sony, correct? Sony is also in games, video games and gaming industry. But you will slowly see the dominance of US company coming down a little bit, and you may see one or two companies from Japan in next 10 years. Then, considering the outsourcing, do you feel India will increase its market share in IT services with more work from home? Yes, absolutely. They will increase. I expect Infosys and TCS to do very well, and more business coming to India as because of the scale and the kind of infrastructure we have. The next question is, how will automobiles do in India? Automobiles is a value play. Automobiles will do from the current juncture as COVID situation improves. Automobile sector will do well. They'll bounce back from the current levels. But on a 10 years basis or 5 years long-term play wise, IT will outperform automobiles. That's what I would say. But at a current level, for next 6 months to 1 year or 2 years, yes, automobile also will perform because they have been beaten down very badly. With that, thank you for all the questions, and I will come with another webinar after 2 weeks, and keep in touch. And if you like today's webinar, please subscribe to our channel, and thank you. Have a nice long weekend for Ganpati festival. Thank you.